All righty, good evening. Welcome to the Tuesday night trade finds and adjustments for May the 7th of 2019. I am Kevin Hurley. I will be your commentator here today. And obviously, we had a brutal market today. In fact, I might say it's a brutal market where things didn't come back like yesterday. Meaning the Dow Jones was down 1.79. The S&P 500 was down -1.65, and I'm going to just say the NASDAQ composite was down 1.96. Pretty ugly day. So on days like today, I do some reflection. And the first question that you usually want to ask yourself, how did you fare today on a black swan type of event? How did you guys do? Not good. Okay, well, the question is, though, usually the first question I go to is going to come down to, did I beat the S&P 500? That's my first question. Second question, do I understand why the markets are moving the way they are? Those are the questions I'm asking myself. Those are the questions that I sit in and that I am going to look at for a day like today. Now, if it's okay with you guys, I'm going to share some real feelings and some real frustrations. I thought we would get a repeat of yesterday. That is how I approach today's market. Was I right? That's a rhetorical question. Was I right? Obviously not. So, my day went a lot like this. Well, today sucks. Let's go ahead and let's see if it starts like it did yesterday. I mean, in all honesty, yesterday should have been the down day, and today should have been the comeback day. A question was brought in here, and I think that's a good question. Two of them, actually. The first one, no, why do you think we'd get a repeat of yesterday's bounce? So the thought process, Kevin, what are you thinking? Well, we've been through this a half a dozen times with Trump already. We've been through the rhetoric of, I'm going to increase tariffs. Oh, we're going to cancel the whole deal. This is how Trump works. It's a pretty amazing leveraging point, and it's just a numbers game. We buy $695 billion worth of goods from China. In all reality, their economy is an export economy. And for all intents and purposes, round numbers, we're 33% of their GDP. Our GDP, well, it's more of a It's more of a, how would you say it? A consumer based. Our GDP is what our consumers spend. So China has a lot more to lose. And if I can, I'm going to go to the second question. Second question is, help me understand how the tariffs aren't a tax on U.S. customers. The tariff game is pretty easy. China, we are a third of your GDP. We buy a ton of crap from you. We're now going to raise the price. And really, we're raising the price to have it so Americans don't buy your goods. We want to make America great again. We want to buy American. I used this last night in my example. All of you go check my Hurley investment, or you should have received an email today on my my market view. I apologize for having that cancel. My family ran into a little issue, so I'm playing Mr. Mom. But the short answer is we're trying to make it so that if we have a car, a Chinese car, or a Chinese product that sells here for $20,000, and we can raise the price by 25%, that car is going to cost $24,000. Well, that's not such a good deal when you have a Ford Focus or an Escort that's worth $21,000, selling for $21,000, $22,000. All of a sudden, we've priced out the middle American buyer from some Chinese good, where they're going to look to some more quality goods that are now at a comparable price to all the cheap crap that we get from China. So the short answer is yes, it's going to be an increase in price for those that keep buying China. It will be a market mover to move people to more of the items that are here in America and American made, or made from other countries for that matter. So it's a make America or put America first tactic. People that want to buy Chinese can still buy Chinese. They will pay a little bit more for it. But the hope is that you're shifting those customers away from the Chinese products to other products and other revenues. So it hurts the China GDP. It hurts their income into their country. It hurts their sales, so that we can hopefully have a more level playing field for U.S. companies, and for that matter, world companies against China. 2 comments just came in. Don't tariffs hurt U.S. companies manufacturing in China? Yes, they do, which means U.S. companies then have to move abroad. And if you're in China, you're probably going to look at some Korean suppliers, some Vietnamese suppliers. You're going to look outside of the Chinese supply chain to find other suppliers to replace those products. And in all honesty, it's a brilliant macroeconomics leveraging tool to level the playing field, would be the best way to say it. If effective, will the rise in inflation then interest? So if it is effective, it may rise inflation, but it doesn't have to, Abraham. That's a very interesting point you bring up. Tentatively, in the short run, it might raise inflation, but in the longer run, inflation should be the same as consumers move to more price-friendly competitors than what China has to offer. And let's be honest, I can't think of something China's innovating. They're copying products. So the products that they're copying, you should be able to buy a better quality at a now more competitive price, and you really don't have the rise in inflation. The comment was just made, except there'll be a lot of pain for U.S. companies and U.S. consumers. Again, Maud, I disagree. It's a shifting of buying preferences. There may be a little bit of pain for some international companies, but most international companies have various areas and they have various supply chains. So it should never, if the companies run correctly, be a lot of pain for the companies. For U.S. consumers, again, we're going to switch our buying preferences from one brand maybe to another. And I guess let's use the Apple phone. You know, some of us are going to hold on to our Apple phones a little bit longer because the new ones may get hit with a tariff on them. So why not wait longer for a 5G phone? Or why not move over to the Pixel 3? That's a Google-based phone made completely here in the United States. That's very comparable to the iPhone 8. So again, it's a macro event that takes time, and it's a process of where we go. I thought we'd get a repeat of yesterday because the Trump tweet came out on Sunday, and the only thing that was different was the White House saying, hey, we're supporting Trump. We're going to raise the tariffs if we need to. And how does that not hurt Apple? It doesn't hurt Apple because Apple's going to switch their supply chain from maybe buying some of these cheaper Foxconn chips and using the Foxconn employees. Maybe they're going to run more out of their Ireland company or their South America company. Same thing with Nike, right? Nike will no longer run so much out of China. They're going to ramp up their Brazilian company that used to run most of the stuff before they went to China. And possibly, maybe you're going to, again, Maud, maybe you're going to, maybe you're going to move from Nike over to Under Armour. Under Armour hasn't had a shoe that's blown up on a college athlete on the court yet. Under Armour has better, in my opinion, they have much better athletic apparel than Nike has. Obviously, I'd consider the shoes in Nike significantly better, but, you know, we're going to go from a James 8 to a Curry 8 shoe, and it'll be a little bit less. And and so the idea behind it is, hey, if we make this seem like we have more leverage, then when China comes to the table, it can be, you know what, guys, we've got to get this done. We've done 95% of it. I know you're not willing to stick it to the companies that steal our intellectual property, but if you don't want to do that, for all intents and purposes, we're going to take away a third of your GDP. And not only that, we're going to get paid in doing that. Oh, and by the way, you probably can't find a better time with low unemployment, higher incomes, full, job, low inflation. You can't find a better time for the U.S. to step up to the plate and be able to follow through with our threats. Now, I honestly don't think anyone believes Trump's going to follow through with that. And it also, for lack of a better term, is pretty dang brilliant. He's giving the second in command the opportunity to say, hey, I talked to this buffoon. We were going to have these intellectual property protections in place anyway, but I gave us another month, and they're not going to raise the tariffs as long as we come to the table with a way that we can incentivize our companies to not take that intellectual property, but to spend their time creating the technology. So it'll be pretty interesting. Ma just asked a question. So will China retaliate against General Motors, Ford, Apple? They should. I would. But it might be better to not let it get to that point. So I thought we would get a repeat of yesterday. Nothing new came out. In fact, the days are kind of swapped on how the market should have reacted. To show you a little bit, let's see where I'm at. Let me pull this one out. Let me go to a couple different versions here. The No Parker group took a hit of 80,000. I actually thought it was 81. So I was down 1.1% on a 1.65% S&P 500. My other big group, the total account groups. Where are we at with this one? That's an after hours thing. I was going to show you this group of 8.5 million, little bit differently, but it was not up 34,000. In fact, it was down 44. So here I was all excited to show you something, but obviously after hours, there's something going on with E-Trade. 44,000 divided by 8,692 is about 0.5% down. And these have some more fixed income parts to them. So as I look at today, I think I'm going to be okay. Now, when you're doing spread trades, whole different story. Today's account gain, 1,887 of a loss divided by, roughly at the time, it would have been 36,800. It's a 5.1% loss in an options spread account. So, putting that into perspective, is anyone surprised that your option spread account was, for all intents and purposes, 3.5 times worse than the S&P average? Is there anyone that's surprised about that? Because if not, if you are, I'm going to go back to a little bit of education here. All right, I see a couple no's coming in. So why not? Why are you not surprised that the spread account is down 3.5 times the average index. Wow. In fact, Abraham wasn't thinking about that one, but you are correct. It's time and leverage. It's time and leverage. How far out in time some of these positions are, and the leverage directional way that they're put on kills me. So let's take a peek. Boeing. Thank goodness I took some profits when I had some profits, and I'm out to July. Would you be okay in your portfolio with a Boeing July vertical at 390,400 that you could get in for $1.90 today, giving you, for all intents and purposes, giving Boeing and the market 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks to turn. For me, I'm really excited. And I'm thinking that I'm going to do one of two things. I might add some out of the money 380 long calls when we see a turn, or I might dollar cost average these positions to get my cost basis down 190 from 373. Let's do some math there. 190 plus 373 divided by, 190 plus 373 is equal to 560 divided by 2. I could get my cost basis down to $2.81.5. I actually think I like, though, just adding some leap long calls. And the short answer is, if I was going to put this position on new, I would most likely do it tomorrow. I would do it before we have a bellwether like Disney that could move our markets higher on Thursday. I might even wait till Friday and or Thursday to see if we get any news or any tweets on how the trade is going in general. Bank of America, 30-cent cost basis. I probably should have taken some profits, but in all honesty, I'm wildly profitable. I can still lose a dime and get 100% return. And I'm looking for in all honesty, I'm looking for a bounce in August. So there's nothing I feel I have to do on Bank of America. Baidu vertical, it's a September. I bought myself some time. I can go through the May 16th earnings. I can go through June, July, the end of August earnings. I don't like being down in both of my bull call positions, but I don't have any worries with it right now. Disney. I've got bull calls with a cost basis of $13.85 that are worth $16.90 right now. 2 of them. Out to January 2021. They just had a $2 billion movie in 11 days. They're going to crush the 2.75 total Avatar that was like 1,000 days in the theater, they're going to beat that in their first month. None of that is into this earnings. That's all going to be the next earnings. I think these guys are going to be up to 150 pretty darn quickly. If anything, not a worry with them either. Ford, profitable. I'm 8.5 cents higher today than I was last week, where it was only at 140, or maybe it was 142. Ford's holding in remarkably well. Facebook, dang it, I'm no longer up $19. I'm feeling some pain. But I've got till June 2020. My biggest one, actually, if I can show you Visa, Visa's profitable. I'm doing okay right there. January 2021. I'm actually profitable right now. My only one that's giving me heartburn is Under Armour. I still have a protected put at 22.50, and I have a June 22.50.25 bull call that's unadjustable right now because my stock hasn't moved far enough to really roll that short to where I'd be comfortable. In fact, right now, I'll be honest with you, I'm looking a little more excited to possibly take some profit on some short calls. But it's only 18 cents, and if I got called out, I'd be okay with it. So as I look through my positions in my portfolio, I'm down. But I feel like I can live with everything that's here and everything that's happening right now. I don't feel that that I have to worry about it. 2 comments were brought in. Kevin, shouldn't you have or will you take some profits? Right now, no. Right now, we're talking about less than a 2% movement in the market. And if every 2% move in the market, I'm taking stuff off and booking profits, I'm a day trader, I'm not an investor. So as of right now, even though my account is down from where it was previously, do I feel I need to take profits? I do not. Financials did not go down more than other sectors. That might be a hint of what I expect in inflation. That is an interesting point of view, and it's actually very interesting at the way that you're looking at that. I can bring one more point out to you for today. Today, educations are putting on new trades and paper trading accounts. Professionals don't have to force a trade on any given day. I think you would be ridiculous. You don't have a true market direction. You have a 2% pullback off of the highs. I don't see a position to run to. I don't see a trade unless you want to dabble in a flyer, something that may take off or may not. And one of the most important things to learn as you're trading is that you don't have to force a trade. This is where income, people that are trading for income, screw themselves time and time again. Oh, I need the income. Oh, I need a certain amount of money. Oh, I've got to do this. I've got to do that. And they screw themselves. They force a trade for income that does not have a direction, that does not have a secondary exit, that does not have a plan. They're trading for income. They're not using their brain to figure out what they should be trading with the probability of being profitable. It's stupid, it's foolish, and it happens all the time. Guys, I would not be putting on a trade. I've got enough in my portfolio that I can sit and wait a day or two. Thursday morning will be very interesting. Thursday morning, I might be rushing into some positions, or I might even place them tomorrow. I might think that, hey, Disney's going to have a good enough return that I can jump the gun, that I can dollar cost average some of what I'm already in and do my best to make some more money at it. So welcome to real trading. Welcome to not having to find a position that's a crappy position for a TV show or a student base. This is being smart in your trading and saying, hey, you know what? I can give myself a little bit of time and make a good educated decision versus pushing something through the market. Any questions you guys have for me that I can give my insight on that may help you with your individual trading? Sitting for coffee. Insight upon the Uber IPO. So I heard a lot about that this morning. And really, here's where I'm going to sit on that one. Lyft screwed Uber. I do not think that the same mistakes will happen, but I wouldn't be touching Uber. I would think you're going to find a much better opportunity to buy Uber lower than on their IPO date. Uber may bring the whole market down as people run away from it versus running to it. So that would be my Uber thought. And no, I would not jump into Uber, especially when it's telling you right now, hey, we're not going to be profitable for 3 to 5 years. I'm sure it's going to get some leeway, but do not expect Uber to get Amazon type leeway. That's just not going to happen. Mod, do you wait to see a turn? And if so, what time frame or just dollar cost average? So Mod, I'm a little confused today. And because I'm a little confused today, I'm not willing to adjust or move trades based on confusion. As I went through all my positions, I think dollar cost averaging is going to help me better than in adjusting, because I still do think that things are going to move the way that they're supposed to. I don't see a problem with how the market is still bullish, in my opinion. I just don't see a dip or a drop that's going to reminisce last November, December. So because of that, reason, I can sit back and be patient, is my belief. At least that's my belief today. That might change tomorrow, but that is my belief today. And why not make some of what I have more profitable? Why not Why not be more profitable? What does the mirror last number when you know? Good question. I don't know. The answer is I'll know it by the market reaction. So I don't have a, believe it or not, I don't have a crystal ball. But if you see indexes start to go negative, then that's when you need to follow the trend. Negative, that doesn't make sense. When you see indexes go bearish, that's when you need to start. I thought you just said, damn, Kevin, I thought you had a crystal ball. She actually, I think, says darn, but that was fine the way I read it. So I'm looking for technical crossovers that are going to change my mind. And the technical crossovers will change the way that I treat my spread trades and go into an adjustment thought process. Explain time and leverage. Time and leverage, because my spread trades are in a timing pattern where they're going to expire, I'm going to get harder because I don't have forever like an index to wait for things to come back. So I am not surprised to see a spread trading account down 5.1% or 3.5 times the market average, because my spread trading accounts have time and are leveraged directionally. They're my profit making portion of my spread is leveraged, and it's leveraged for all intents and purposes, right? 100 to 1. One contract has the leverage of 100 shares of stock. Me, I'm in everything to maximize commissions. I'm in everything at 10 times or 1,000 times leverage, 10 times leverage of positions. So with that said, it does, because I am leveraged and directional, there's spread trades that are to the upside. It does not surprise me, nor am I going to panic over the fact that my account is down significantly more than the indexes are on a single given day. Now, please understand, I'm not happy with seeing my option spread trade account down 5.1%. That does not mean I'm like, hey, I'm down 5.1%, yippee. I'm actually kind of pissed off about it, but I'm not surprised about it, and I'm not feeling like I've got to shut everything down to save my capital. I actually am feeling just the opposite, and I think Abraham said it best. I'm going to sit back and sip my coffee. I'm going to sit back and just relax and not make any judgments on not understanding. If I can tell myself I don't understand, I'm not looking to go make trades or adjustments on misunderstanding. Well, Kevin, nothing to misunderstand her, and he's going to slap more tariffs on. I disagree. He's said that 5 or 6 times. He's done it once. Common sense says he won't do it this time. I think he's just doing his negotiations. And with all due respect, I think it's brilliant. He's giving the Chinese something to come home with to have a win. So because of that, I'm going to choose to sit back and be patient, which is extremely hard, which means there are days like today that I'm pissed off that I got my butt handed to me. But again, we're still up over 50% of the spread trading account. I'm not turning everything down and giving up on it. Guys, have a wonderful evening. I appreciate you being here today. I can't wait to talk to you Thursday morning. We'll see where we're at then. I do apologize for last night on my commentary. It is up on my Hurley Investments, but my family is running, my My mother-in-law is having some issues that required her daughter to be there as quickly as possible. Have a good evening. Thank you, Maud. Thank you, Abraham. And I look forward to seeing you Thursday. Good night, everyone.